Good morning. August 29th. We end of the month, maybe almost the end of the growing season. Weekly price changes, kind of a mixed bag. Corn up 9 cents, soybeans down 1. Opposite directions. Most of those gains in corn on Friday. December Chicago wheat up 5. Minneapolis, opposite direction, down 10 cents. So the grains are floundering, I guess would be the best way to put it. October feeder cattle, they know which direction they're going. Straight up $6.37 this week. New all-time 6,000-year highs in feeder cattle and fats. Fats up 4.93. October crude oil starting to see some momentum on the upside as well, up 49 cents for the week. And December gold up 62. Both of those have had back-to-back weeks of gains. December gold, $100 gains past 2 weeks. Weekly crop progress showing a continued improving corn and soybean crop. Corn conditions unchanged, but that's a good 6% better than last year at 71, good, excellent. 192.5 is the progressive ag yield estimate, up 0.65 bushels again this week. We are almost 10 bushels above trend and 4 bushels above USDA. And many people thought that was a high water mark for corn, not according to our yield model, but soybeans, we thought it might be. 53.6 was USDA. Ours has just went up 0.2 bushels this past week to 53.4. One more week like that, and USDA won't be so ridiculously high anymore. The crop continues to improve. Soybeans improved 1%. That's 2% better than last year. But we've had a slow developing crop all year. We planted it early. Now we're barely on normal progress schedule, but a slow developing crop is usually a record shattering yield in the United States. And most of those big yields come in the South, like we had in 1994 and 2004. You recall those years we froze the northern corn belt, and we still had a record shattering crop by a lot those 2 years. I'm thinking this year is going to be like it. Our yield model is suggesting that. So actually, you look at these charts, there may be some sales opportunity here pre-harvest. Hard red spring wheat, 49% good, excellent, down 1%. That's a good 20% below last year. Yet spring wheat yields made new lows this week, but there looks like an upside reversal Friday. Maybe it's time to buy back spring wheat that we had to price this year. Topsoil moisture, 64%, adequate surplus, down 3% this week, but still well above last year, and the season's over. Drying out the soil now might help us to harvest the crop, whereas in contrast, some of that spring wheat was harvested. There's ruts in the fields after it. It was not an easy harvest. Subsoil, 65% adequate surplus, down 3% this week, still well above last year. Hey, the crop is made. Once September hits, frost is the only factor left. And, now we're looking at mostly the northern corn belt where it will impact. Of course, that will be a big impact on northern corn belt growers if a freeze does occur early. There's cool weather forecasts, so it might be an early frost, but you're still going to have a pretty good crop. It's just going to be a poor quality crop. Wet and low test weight, that is not a good combination on a big crop year. Here's the corn chart. Here's our USDA August report when they increased those yields and added a couple million acres to planting. And wow, we have jumped 30 cents in corn. I look at that, you're at the top of this range, maybe even broke out of that downtrend with that big update Friday. I look at that and think, wow, we have a yield that continues to expand week by week. We have but a record shattering crop. We have more acres than we ever had. We're higher than we were before we knew we had 2 million more acres at 420. I look at that and think, is that a selling opportunity before harvest? Another way of looking at it, we should maybe sell calls on 20% of the crop here. You could pay for your ECO, which is probably going to pay pretty big this year. I think we're going to come back down here and test this 390 area unless we do something to hurt the corn crop. I don't know what it could be. Early frost is probably going to only affect the northern corn belt. And cool weather actually will lower disease pressure in the south and help that crop to feel better. So I just don't see how we're going to maintain that. China was in negotiating trade with the U.S., but how are we going to write a trade agreement with China when we still have the Ukraine war going on, where Ukraine has more or less sided with Russia? We have senators on both sides of the aisle that want to tariff Ukraine or tariff China and India, anybody who's buying Russian energy. They're not going to stop buying Russian energy because we tariff them. So we've got a problem until we solve that Ukraine war. And Mr. Zelensky and the European Union seem intent on continuing to lose more ground to Russia. Interesting situation there. But I look at this and think, at 420, if you need to make corn sales at harvest, you should lock in that futures. I know your basis stinks, but a lot of times when futures drop down here to new lows at harvest time, that basis will improve to try and attract some cash grain. There's going to be a lot of piles and a lot of bags filled this fall, I think, in Corn Belt country, because we're going to have a lot of crop. And if we drop back down here, I think that we'll get a good basis. Let's say you sell corn at 420 and get a decent 30-cent basis or so, you might actually end up pretty well. Same thing in soybeans, but perhaps a little better sale opportunity. 10.54 here we're closing. We're close. 10.70 is our recent high. $11 is basically our yearly high. We may have an opportunity to price soybeans in the top third of the past year's trading range before harvest of a record-shattering crop yield. We did lose acres, 6 million acres or more, to corn this year, and so soybeans definitely has a more bullish stance. I'm not saying to be, stay short and never buy that grain back, but if you need to make sales at harvest, the market is giving you an opportunity to sell what you need. I would recommend doing that early this week. 10.60 or higher on the soybean November contract. I'd like to do it between 10.70 and 11, but I don't know if we'll get that opportunity. And certainly 420 December Chicago Board of Trade corn is probably a pretty decent pre-harvest sale level for a year we have record-shattering crop. I'm bullish once harvest is done, but until harvest is done of this record-shattering crop, I have a hard time being bullish corn and soybeans. You look at the weather forecast the coming week, not a lot of rain, a little bit here in the western Corn Belt, Kansas, Oklahoma, Texas, but pretty sparse, below normal precip forecast the coming week. And the 8 to 14 going out to week 2, we're already up to September 12th. The average frost date in Fargo, North Dakota is about September 21st to 23rd, somewhere around there. So actually, if we get close to that normal frost date, we're going to end up with a pretty good crop. But we do need some heat. We're not going to get it in this coming week. It's going to be a cool week. So with this kind of forecast, we're probably going to freeze early unless this western heat moves in. But we're going to have to dodge that bullet in the first half of September yet. Precip forecast is actually turning a little drier. That's going to help the disease pressure that's developed here in the southern Corn Belt. And that cool weather probably will also help. We got above normal rainfall here in the west. So here is our wheat chart. Chicago wheat actually had a nice upside reversal here. I think you can get long wheat. You can buy futures. You can sell puts in Chicago. I would not buy calls at this point, but I think the wheat market is in the process of bottoming. The only thing that could derail that is if corn and soybean crop is much, much bigger than we anticipate. Let's say we get a 200 bushel corn crop, there could be additional pressure on wheat in the harvest. That is a possibility, actually, just as possible as the 182 yield that Pro Farmer came out with based on our yield model. 200 bushel is just as likely as 182. So here you have Minneapolis wheat. What a pathetic looking chart. We went down, we're down 580 here. We're down almost $1 from where we were just in the first part of July. I'm not sure that's justified in spring wheat. Actually, a little upside reversal on Friday. If you've sold spring wheat, this coming week is probably a good time to start buying that back. The only thing that could derail spring wheat, I think, run spring wheat additionally down would be a much bigger corn and soybean crop. But at least the spring wheat harvest 2/3 done. This is probably the time to start buying back those spring wheat sales. And some of these outstanding markets, feeder cattle, new all-time highs this week, Wednesday making that high, but big gains again for the week. And fat cattle, the same thing, new all-time highs Wednesday, and 6 1,000-year highs in the cattle market. What a bull market that's been. Some of these outside markets, crude oil gaining a little bit this week, but you can see this bottoming price action in the intermediate term. We're seeing some strength in the crude oil, and that probably means that market is headed higher. The last market I'm showing here in the charts is gold. Look at how we've been trading this range in gold between 3,300 and 3,500. That's a $20,000 move per contract in gold. And of course, this last time we run up to this recent high, I sold half of my gold on Friday, so of course it's going to run to 4,200 and not turn back, because maybe it'll break out of that range. But this consolidation range is a continuation type chart. This is not a potential top. Tops last minutes, not for months like this. And I think that this gold is poised to run to 4,200 bucks, and maybe feeder cattle are pointed toward doubling their previous high of $210 and running to $420 per hundredweight as well. We're at 360 right now. We're not that far away. So pretty interesting situation in the commodities, screaming higher on the livestock, gold threatening to run to new highs, crude oil finding some upside. Actually, I think the grains would have loved to have gone higher. They wanted to go higher this year. We should be bottoming our 3-year price drop this year, but we end up with a very, very big corn and soybean crop. And so the market is just having a difficult time making that bottom with those big crops. But there's no question we're going to want to be long grains going into the next 3 years probably. I think grain prices will go higher. The only problem is we got to get through what looks like is going to be a record-shattering corn and soybean crop harvest. And I look at these recent bounce and think, wow, maybe, if you need to make some sales at harvest, this is probably the time to do it. I don't like to wait until you're forced to. Usually those are the worst sales of the year. So I hope you have yourselves a great weekend and good marketing.